If you've ever looked up a house on Zillow, done the math in your head, and thought, there is no way I qualify for that, I want you to stick around for the next 10 minutes or so, because I promise you, you're probably closer than you think. I'm Kris Anderson, a mortgage loan officer with BOC Bank, and I work with buyers all over Texas. But today, I want to talk directly to my Amarillo neighbors, because the honest truth is, most people who think they're not ready to buy a house are just missing three pieces of information. So let's go through them one at a time: credit, income, and down payment. And by the end of this video, you'll actually know where you stand instead of guessing. This video is for you if you've never bought a home before, if you've been renting and wondering if it's time, or if you tried to buy a year or two ago and got discouraged. I'm not going to sugarcoat anything, but I am also not going to make this sound harder than it actually is, because frankly, a lot of the you need this to buy a house stuff people hear is outdated or just plain wrong. Here's the framework we're using today. Every lender, no matter the bank, is really only looking at three things when they decide what you qualify for: your credit, your income compared to your debt, and your down payment and savings. Let's take them one at a time. First, credit. This is usually the scariest one for people, so let's clear up a few things. Myth number one: you need a 750 credit score to buy a house. Not true. Depending on the loan program, buyers can qualify with much lower scores than most people assume. I'm not going to throw out an exact number on camera because it depends on the loan type and changes program to program. But if your score is anywhere in the fair to good range, it's worth having a real conversation instead of assuming you're out. Myth number two: checking your own credit or getting pre-approved hurts your score. It doesn't work that way. A soft pull to look at where you stand costs you absolutely nothing. Myth number three: you need to have zero debt to qualify. Also simply not true. What matters more than amount of debt you carry is how it compares to your income, which is exactly what we're going to talk about next. If there's one thing I want you to do after this video, it's this: don't assume your credit disqualifies you. Let's actually look at it together before you count yourself out. The second piece is income, but more specifically, how your income compares to your monthly debts. This ratio is called your debt to income ratio, or DTI, and it's honestly the number that decides more mortgage approvals than anything else. Here's how to think about it simply. Lenders look at your monthly debt payments, your car payment, minimum credit card payments, student loans, and the new house payment, and compare that total to your gross monthly income. There's a percentage range that most loan programs want you to fall under, and it's more flexible than people think, especially with certain first-time buyer programs. The biggest income mistake I see: people assume they need to be debt-free to buy a house. You don't. What actually matters is the balance between what you make and what you owe every month. And this is very fixable. Sometimes paying off one specific card, not all of them, is enough to shift your number in the right direction. This is generally one of the fastest conversations I have with clients, because once we run your actual numbers, most people realize they're in a much better spot than they assumed. The third piece, and probably the biggest myth of them all, is the down payment. Here's the myth: you need 20% down to buy a house. That number comes from conventional loans wanting to avoid mortgage insurance. It is not a rule, and it is absolutely not the only way to buy. There are loan programs built specifically for lower down payments. Some government-backed programs allow for a down payment in the low single digits. And on top of that, Texas has down payment assistance programs through the state and through local programs that can help cover some or all of your down payment and closing costs if you qualify. I'm going to do an entire video on those specific programs coming up in a few weeks, so if that's the piece holding you back, stay tuned. But the short version is 20% down is a myth for the vast majority of first-time home buyers. So let's bring this together into a simple readiness checklist. You don't need perfect answers to all three. You need a general sense of where you stand. Number one, credit. Do you have an active credit history and are your payments generally on time? That's a great starting point. Number two, income versus debt. Is your income steady and are your monthly debts manageable relative to what you're bringing home? Number three, down payment. Do you have some savings, even if it's not 20%? Assistance programs can often bridge the rest. If you can say kind of to all three, you are absolutely at the point where it's worth having a real conversation, not guessing based on what you've heard from friends or the internet. Now, a quick word specifically for Amarillo. $250,000 is roughly where the median home price sits right now, and the market has been shifting toward more balanced conditions, meaning more room for buyers to negotiate than we've seen in past years. That doesn't mean prices are low, but it does mean this is generally a reasonable time to start the readiness conversation rather than waiting on the sidelines. If you watch this whole video and you're thinking, okay, but where do I actually stand? That's exactly what a pre-approval conversation is for, and it costs you absolutely nothing to find out. Send me a message, give me a call, or hit the link in the description and let's actually run your numbers instead of guessing. I'm Kris Anderson with BOC Bank, NMLS number 1201276, Equal Housing Lender.